All right, we got to talk about everything that's happening in the stock market today. More news, although it was an uneventful day. So we're going to talk about everything that's going on so we're all up to date. You're welcome to hang out with me while I learn and we could continue to learn together. So let's get into it. The war is still at the forefront of everybody's minds. Trump issued a warning to Iran today to unconditionally surrender. And this has caused a lot of fear about what could happen. He also issued another one. He said that we know exactly where the so-called supreme leader is hiding. He's talking about the leader of Iran. He is an easy target, but is safe there. We are not going to take him out. And then he put in parentheses, kill, and then ended it off with at least not for now. But we don't want missiles shot at civilians or American soldiers. Our patience is wearing thin. Thank you for your attention to this matter. And what this ended up causing is a lot of scare going on because it seems like the US is getting more involved with this Middle East conflict going on. Although the US did clarify that they're only defending Israel and not actually joining sides with Israel to start attacking Iran. But the idea comes up because there's quite the military buildup happening out there in the Middle East on that side of the world. Yesterday, Trump left the G7 summit early, and his focus was, so he said, to focus on the Middle East conflict. And what I kind of feel like is that he said he was asked to clarify as to why he left, and he said he wanted an end, a real end, not just a ceasefire. And I kind of feel like with that G7 summit, the reason why he left is, one, like the whole purpose of them meeting there was to discuss with Trump their tariff policies and agendas and kind of negotiate. And I kind of feel like it was like a belly to belly, try to charm this guy, get him to like you and soften up a little bit as far as his tariff blows. And that didn't work. So Trump, in my opinion, seen this Iran and Israel conflict going on, and that was his scapegoat to get up out of there. Like, hey, I'm not loosening up, and I don't want to like be rude and just continuously tell these people no, 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 we're not folding. So I'm gonna get out and I'm gonna look good and I'm gonna focus on this war going on. We also seen that the death toll has increased in Iran up to 450 people, while the Israeli death toll is still at 24 people. We also seen JD Vance make a couple tweets today, and this one he made a longer post, and he's talking about the consistency of POTUS and that Iran can't have a nuclear weapon. And second, there's been a lot of confusion over the issue of civilian nuclear power, and he's just kind of going through it. I'd say the main focus right here is that he's kind of hinting that Trump may have to take further action to end this, and that we don't necessarily know what that's going to be, but the ideas, like the stuff that could arise from this issue, like with this man's approach to negotiations and tariffs and all this other stuff, it's been a complete wild card and, honestly, so to say, a mess. So imagine his approach to getting this war to end, and how did he put it? Unconditional surrender? Who knows the route this man could take? So Trump is considering options to get it all sorted out, including a possible US strike against Iran. And that wouldn't necessarily be good, because what can that lead to? War? Because that's a real threat that can occur right now, and that's what a lot of people are kind of sketched out about. So more details are to come from the, they're probably not going to release all of the details from the Situation Room, from what was going on with that. But one leading tell to how people are feeling is this top chart here in the middle that is BNO. So what BNO stands for is Brent oil. And this is more your global benchmark for oil. And what we've seen is that today it spiked 4.66%, and it's still up in the after hours. And whenever oil spikes during war, it's around the uncertainty regarding oil and war and global trade. So the oil market right now is still pretty resilient. I mean, it's not completely going crazy, although people are starting to get spooked about potential outcomes. But there are some reasons, so to say, as to why the price of oil is being contained. So right now it's well supplied and it's still cheaper than it was a year ago. OPEC is boosting production, and that kind of all goes into supply and demand ways on that. Usually when there's a lot of demand, supply goes down. So to kind of offset all that, they raise prices. A lot of people want it, I'm going to raise my price. When a lot of people don't want it and supply is kind of weak, they lower prices to stimulate demand. That's common supply and demand 101 right there. Economics 101. Also, another one is global economic growth projections, which are expected to be a little bit lower with these high interest rates. Although other central banks around the world are cutting rates, this tariff mess is still causing a toll around the globe. So all that's to be determined, and one thing that everybody's watching, like I said, is the cost of oil while all of this is going on. And something just to kind of point out, let's put oil on the big screen real quick. Come on, you can load. What was it, B&O? Alright, so we're loading. So let's look at oil, right? And let's put it on, heck, the 4-hour chart. And we can see that it's been pretty much straight up since this conflict started. It's really been straight up since last month, pretty much. Really, it just keeps on going up. And usually it's more cyclical as we head into the summer. There's a market cycle that goes into play here. Usually consumption and uses for oil are higher in the summer. But something I thought was interesting that I laid across or read across earlier is that more than 90% of Iran's crude exports go to China. And let's just sit back and think about this. So Iran is China's cheap oil plug, right? This is where their supply for cheap oil comes in, and everybody loves cheap goods, and oil feeds into everything whenever you order goods or ship goods or literally everything. Energy, oil is required in all of that. Transporting goods, as far as the shipping them goes. So it feeds into all of these other industries. So when you got cheap oil, that allows you to, your costs are lower in other areas. Now, with the US's involvement in the Middle East conflict now, like so far, they're just claiming, hey, the US isn't here to, like attack Iran. Although, like, we might have to do what we need to do to get this to stop. But right now, we're just helping defend Israel. Israel can still attack Iran. We're good. But how can this trigger China in this event during this trade war that's kind of going on with talks between Trump and China regarding these Trump tariffs and where we're going to go in the future once this reduction ends in 90 days, which the 90 days is almost up. I think it was like July 4th. No, July 4th is when they're expected to sign the big beautiful bill into law or whatnot. So anyways, that reduction period is coming to an end soon, and we don't know if tariffs are going to go back up to the 145%, if they're just going to sit at the 30% or 50%, or if they're going to go away completely. We don't know any of that. But with that being the case, and now the US has kind of picked a side, and it seems to be Israel in this Middle East conflict, what if China picks Iran's, and then they're all of a sudden defending against Iran, and it's kind of like the US is defending against Israel, or defending Israel, and China's defending Iran. And then it's like, oh, now a US or a Chinese citizen kind of got killed by accident. So now they're going to retaliate, not against the US or China, so to say, but they're going to retaliate against that other country that attacked them. And then how does that happen? So there's a lot of uncertainty right now, and oil prices are a big benchmark to just watch. So continue watching these oil prices as more news comes out and it continues unfolding, because this is going to play a big factor into the shock effect as far as how the market goes. Now, what's the VIX looking like? So we still see the VIX is still pretty low. Now let's look at it on the 1-hour chart. Yeah, we've been spiking, and really today around like 1 to 12:30 we seen the VIX start rocking a little bit higher. We went from under or right around 20 to well above 20 up to almost 22. on the VIX. So volatility is for sure increasing, but it's still pretty low compared to where it has been. And all of this is in the light of a stock market that is still reaching new highs, or reaching 4 new highs, I got to say. So we're not quite there yet, although we're still within like 10, 12 bucks on the NASDAQ 100, which isn't that much at all. So we're going to continue talking about the stock market here in a bit, but we had some data come out today that I wanted to talk about, and it first starts off with retail sales data. So we got retail sales data today, and what we seen is that it came in a bit small. It fell more than expected. So what retail sales data measures is spending at stores and online, and just spending, so to say. And it came in pretty cool at 0.9%, so a decline of 0.9% in May. This is versus the expectation of analysts of 0.6% expected. So we got 0.9, we expected 0.6, so that's worse than expected. And the decline was mainly driven by auto purchases coming in pretty weak. A lot of people front ran tariffs and hurried up and bought their car before the idea of tariffs kicked in, or altogether just pushed off that big purchase to kind of wait, kick the can down the road, and that impacted retail sales data. So if we take out autos and exclude that, the data excluding autos, auto retail sales fell to only 0.3%, which is still below the expectations of a 0.1% decline gain. So we expected a 0.1% gain excluding autos for retail sales, and that still fell and came in at a decline of 0.3%. So that's not necessarily great. Also, monthly sales of building supplies and home improvement products were down 2.7%. And if you think about that, I made a note to kind of talk about this with real estate, because real estate drips into so many different industries within the economy. Think about it. So building supplies and home improvement products, you usually get that from like your Home Depot and Lowe's and places like that. And whenever people aren't shopping there, what does that say about the economy? Well, usually people go and shop at those kind of stores when they're buying or selling a home for whatever reason, whether a fix and flipper, or whether they're a homeowner looking to sell their home, or homeowner buying a home to renovate, or and get it ready to move into, or just somebody living at their home to just renovate and improve their home. And think about all the different industries that's impacted by real estate, because a lot of people are talking about how the real estate industry is slower than it has been in previous years due to tariffs and interest rates and high home prices, and how this Middle Eastern conflict isn't going to necessarily help that. So overall, back to this retail sales data, some note that the spending still reflects an expanding economy. It's right in line with that, but it still shows the caution that consumers are beginning to show. We also got some data on ocean shipping rates, and this is the article I read from, so you could come check it out. The surge in ocean shipping rates is peaking by Paul Berger. And what this article let me know is that ocean shipping costs are declining as the Shanghai Containerized Freight Index, that is a mouthful, fell by 6.8% on Friday versus a week prior, dragged down by almost a 27% decline in rates from Shanghai to the US's West Coast, according to HSBC Global Research. And this just goes back into supply and demand. So I'm thinking about it, and I'm like, well, if supply and demand's kind of weak, well, if supply's like normal and demand's kind of weak, wouldn't that support the lower import costs? Like people cutting their prices kind of stimulate demand. And I got on GPT and was asking about it. So this is what I asked GPT. I said the surge in ocean shipping rates is peaking. I kind of just sent this little first part. The surge in ocean shipping rates is peaking. Retailers and manufacturers should save on lower import costs this summer as rates to the US West Coast start to fall. What can this be a leading indicator of? I'm looking from the point of view of both businesses saving money on shipping rates as tariffs take place, but at the same time, could decline in shipping be due to lower demand? Question mark. And with lower demand for shipping, I put in parentheses, shipping by ocean takes a while. Like, you're not going to order something tonight and get it in 2 days with Amazon Prime. At least yet overseas. You got to add that yet part, Amazon be Amazoning. But could that be a leading indicator for future inventory levels expected or business investment also being weak? And what we found out is that there were some positive interpretations that came from shipping rates being lower as a cost relief for businesses, for importers. They get to save money. So, like, think your retailers or manufacturers. And that could lead to higher margins or lower prices for consumers. But something that GPT's not including are the impacts of tariffs raising costs. So costs are still higher than they were. It's good for inflation cooling, which is a Fed-friendly signal. And, they're still waiting to wait and see what happens with all of the mess. So I wouldn't necessarily say that this is just great and this is what's going to be that straw that breaks the camel's back as far as rate cuts go. The normalization post-spike, so they mentioned that rates spiked due to the pandemic, supply chain chaos, and Red Sea attacks. So that's kind of what caused these shipping rates to increase. But a drop might just mean back to pre-crisis levels, not necessarily a slowdown is what GPT's approach to this is. And then at the same time, we got some bearish warnings that it interprets, and it points out falling demand because ocean freight is forward-looking. If businesses aren't booking space now, it likely means they expect weaker demand in the next 1 to 3 months. Lower inventory restocking equals possible consumer slowdown. And I'd say this is more so from like the business POV. And then weaker global trade could signal sluggish business investment and slower manufacturing activity, especially in Asia. It's a bad sign for cyclical sectors like your industrials, your energy, materials. And then this number 3 is, I'd take it more so from the consumer's POV. So if retailers are expecting weaker sales, like back to school, fall, they'll scale down their orders. Because think about it, if you run a business and you order goods to sell, but you're forecasting that less people are going to be down to buy goods, so demand's going to be weaker, you're not going to like go load up the boat, literally the boat, because we're talking about shipping rates, and order a ton of stuff if you don't expect to sell it. You're going to order less or just sit with what you got. So that goes back to some of the ideas I was thinking about with the surge in ocean shipping rates is peaking, just because what could this be forecasting for the economy going forward? Now, back to the stock market for today. Let's put back up some of these different charts for us to look at. We got the NASDAQ 100, we got the SPY, we got the Dow Jones. And my iPad's about to die. Thanks for hanging out with me, y'all. I'm still here, though. Alright, let's put oil back. And let's just kind of absorb all this. Let's put Bitcoin. We like seeing what Bitcoin's doing. Bitcoin is what I call it. I just imagine like an older person calling it Bitcoin. You and your Bitcoin. All right, XAU USD. So we want to see what gold's doing in US dollars. We want to see the VIX. We want to see the DXY. And let's see what bonds are doing. Now, something that I noticed was super interesting today. And let's put this more so on the, what are we on, the 30-minute? Let's go on the 10-minute chart. I might cut out some of the stuff I want to see, but so this post Donald Trump made was 4 hours ago. So 4 hours ago was about 1 o'clock. And when we go back to looking at these stocks, once we load, we see that today there was quite the sell-off around that 12:50 to 1 o'clock. And I'm sure the news reporters were all reporting around then. And we seen, stocks didn't like just crash today. But there was this sell-off from the unconditional surrender. I'm going to need to do what I need to do to get this war to end. I think the idea of that is kind of scaring people, because when we were just looking, like, stocks are reaching for a new all-time high. I mean, like with the NASDAQ 100, QQQ, which tracks the NASDAQ 100 index, that is within $11, $12 of its all-time high, and it's $529. So what's $12 to 529? Like that's not that that's not that far away. So everybody's kind of getting spooked. Well, do we deserve new all-time highs with all of this stuff going on and with these escalation fears that are arising? What can happen to that? So what we've really seen today is that some people are kind of getting out of these riskier assets and going to your safe havens, and think like these safe havens in this place, and I kind of grouped them all together. You could kind of see how everything's moving. So the NASDAQ 100, the S&P 500, and the Dow Jones all sold off around the same time. The charts look familiar. We've seen oil kind of spike up during the day. We've seen longer term bonds, which is a form of flight to safety, although some people are questioning its reputability and credibility for a flight to safety just because it hasn't been performing well for a while. Although it is in line with these other charts, the DXY, people are getting back into the dollar. And I think that's interesting because with the dollar, you'd think that the US getting like directly or indirectly involved with this war, conflict, whatever you want to call it, would be kind of bearish for the dollar. But at the same time, a lot of oil is traded through the US dollar. And then what did we see happen with Bitcoin? We've seen Bitcoin really sell off for the day, down 3% about. Seen gold really consolidate, and we've seen the VIX start increasing, mainly around that 1 o'clock range, 12 to 1 o'clock. We've seen it start spiking quite a bit. But it's still pretty low overall for low volatility, around that 20 mark. And below 20 is really low volatility. Now, what do we got to watch for the rest of this week? Well, we got retail sales data today. This is more so looking backwards, and not a lot is gonna mean much as far as data. We do have the Fed coming out tomorrow and announcing their FOMC interest rate decision. We'd imagine they're going to hold rates steady. We're going to get the Fed Chair Powell press conference, and what we're really going to listen to is, I'd imagine he's going to start off the conference saying the same stuff he always says. They're focused on jobs and inflation and keeping it a good balance. And then he's going to take questions, and all of the questions are going to be around war and Trump and this and that. And what he's going to do is make it as boring as possible and tell people, hey, that's not the Fed's place. Our place, and he's going to bring it back to jobs and inflation being level in a level economy, monetary policy. That's all the Fed worries about. That's all they think about. That's all the Fed's willing to discuss. Everything else is out of their toolbox. And that right now, as far as rate cuts, we're going to hold steady. We don't know if we're going to cut rates later on this year. It's all dependent on the dust settling around tariffs and trade and war and oil prices surging and inflation, all impacting inflation. And then we still got the 4th of July. That's when they want to pass the big, beautiful bill and sign that into law. How does that impact inflation expectations? And it just continues and continues. So I'd imagine we're not going to get a whole lot from the Fed as far as what they're planning on doing, like legitimately planning. They're just going to say, hey, we're cool sitting on our hands, holding our breath. We'll let y'all know when we're starting to think. And also note, this is before, so Wednesday is tomorrow, and then the next day is Juneteenth. Stock market's closed. I'd imagine with the extended, because I mean, the stock market's back open on Friday, but I mean, technically, if you want to just be honest, a lot of people are going to start the weekend on Thursday. And if you're into the NBA watching finals, let's hope the Thunder gets that dub and goes for game 4 against the Pacers. I'm out here in Oklahoma, so I'd like to see my team win their first ring ever. Fact check me on that one. But yeah, and then Friday we got the Philadelphia Fed manufacturing survey. So how are manufacturing going? That might give us some details on manufacturing jobs, directly or indirectly. And then U.S. leading economic indicators, which is more forward looking. So that's pretty much what we got today, y'all. Not a lot of news. Pretty much the same old, and I'll be back tomorrow to cover it. Y'all have a good one.